Well, right now, if you're a cash saver, there are some things you can do to benefit from the higher interest rates, but you'll need to take action. And joining us now to share some of those strategies is Marshall Clay with the Welch Group. Good to see you this morning.
Hey, good to see you, Mike.
Yeah, we know higher interest rates, not great for borrowers, but they can be good for those, trying to make a few dollars upon dollars, depending on where you put that cash, right?
Right. So everybody's always looking for where the opportunities are. And I think this is probably the most overlooked opportunity that I'm seeing right now. And so the cash environment really changed in 2022. So the previous 5 years, conversations around cash were really even worth having because checking accounts, savings accounts, money market accounts, and these money market mutual funds were all paying close to zero. So it really didn't matter how you were allocating your cash. Now that changed in 2022 as the Federal Reserve started raising short-term rates to combat inflation. And so now what you're seeing a huge difference between what checking and savings and money market accounts are paying as opposed to money market mutual funds. So what are money market accounts? So those are kind of the traditional banking deposit accounts that you see that are offered through banks. So those accounts are FDIC insured up to $250,000. And most people view those as very safe investments, and they are safe investments. But in contrast to that, the money market mutual funds are actually offered through these investment brokerage houses like Charles Schwab, Vanguard, TD Ameritrade. Most of the investment brokerage firms offer these. And so the difference between the spread between what the money market mutual funds are offering now is upwards of 3.5%. So for example, if you're saving $30,000, if you're just a cash heavy saver and you have $30,000, that's a difference of almost $1,000 a year in interest and cash flow just on really safe money. And so it's very easy to open up these accounts. I mean, it could take 15 minutes to open these accounts at any of these investment brokerages. You can link these accounts to your checking account. So if you need money to spend, you can liquidate those funds, move them back in. And although they're not FDIC insured, this is the great thing, the assets that back up these funds are super safe. So it's not 100% risk-free, but they're super safe, super liquid, and it's just an easy way to generate quick, easy additional cash.
So you can get access to the cash, but then, as you mentioned, transferring it out. And the reason you say it's safe is because it's not as prone to the risk as you should say to the markets, right?
Correct. These are very short-term treasury notes.
Okay.
These are CDs that back up these funds. Now, I will say that not all funds are equal. Not all these money market mutual funds are equal. Some require higher minimum investment amounts. So some may say, well, look, you have to put $5,000 in this money market mutual fund to gain access to it. Some have a little bit higher fees than others. So you want to do your homework and get on some of these investment brokerage websites and look and compare one money market mutual fund to the other. But most of them are highly liquid. You could easily liquidate them, move them into cash. And so it's just an easy way. Just with a few clicks of a button, you can start earning a couple $1,000s extra per year. And every little bit counts in this environment.
It does. And you'll start to see the dividends every quarter when they send you the statements. You'll start to see how it grows.
Yes.
All right. Well, thank you very much, Marshall Clay with the Welch Group. We appreciate it.
All right, you're welcome.
Hey, it'd be great, though, not having to pay for pancakes. That's right.